Company C had a delivery truck at the beginning of the financial year with a cost of 200,000 and an accumulated depreciation of 80,000 rands. The truck was sold on 1 September 2023 for 220,000 rands. Company C depreciates vehicles at 10% per annum on cost. Provide for depreciation for the year ended 28 February 2024. Before we answer that question, this lesson will cover Paper 1 Statement of Comprehensive Income, which is a depreciation question on assets that are sold or disposed during the financial year. We will look into a straight line method question and then a carrying line method question. So our question is a straight line method question because they told us the rate is 10% on cost. So we are doing the straight line method or the cost method, and the formula is as follows. Depreciation is equals to original cost multiplied by rate multiplied by m over 12 as we covered in lesson 1. Now we need to know our parameters so that we can substitute. They gave us an original cost at 200,000 rands. They also gave us an accumulated depreciation, but we know that with a straight line method, there is no way where we enter or use an accumulated depreciation. So we move on to the rate. The rate they gave us is 10%, so 10 over 100, and then we get to the part of our M. Now, because our asset was sold during the year, the M becomes very important for us to figure out. And to figure it out, we need to make sure that we outline our financial year. So if our financial year ends at 28 Feb 2024, then it means it began on the 1st of March 2023. So now we know that when our vehicle was sold on the 1st of September 2023, it was within this time frame. We just have to figure out how many months did we have this vehicle in our possession before we sold it, meaning before we disposed of it. So from 1 March 2023, how many months is it from 1 March 2023 to the 1st of September 2023. So when you start calculating with your fingers, you will figure out that it gives you 6 months. So our M becomes 6. Now that we have all of our parameters, we can now go ahead and plug into our formula. $200,000 multiplied by 10 over 100 multiplied by 6 over 12. You punch it as it is in your calculator and it will give you your final answer of 10,000 rands, and that is our depreciation for the year for this vehicle that was sold during the financial year. The second question reads, Company C also has computers with the cost of 80,000 rands and an accumulated depreciation of 22,000 rands. The computers were sold to a local skill center for 50,000 rands on the 31st of December 2023. Company C depreciates equipment at 15% per annum on cost. Provide for depreciation for the year ended 28 February 2024. So it is clear to see that in this question we are using the carrying value method because it is clear to see when they say equipment is depreciated at 15% on carrying value. So now we are going to go ahead and look into the formula for depreciation using a carrying value method. So depreciation is equals to carrying value multiplied by rate multiplied by m over 12. Now we have already said that carrying value has a formula, and the formula is original cost minus accumulated depreciation. And now that we have all of our formulas, let's go ahead and try to get all of our parameters as they have been given to us in the question. So the first thing that we need is the carrying value. We already have the formula. So the original cost of these computers was 80,000 rands, and the accumulated depreciation is 22,000 rands, and that all gives me a carrying value of 58,000 rands. So I have my carrying value. I can go on and find my rate, and my rate is my depreciation percentage, which has been given to me as 15%, so 15 over 100. And then for M, again, for M, it is important that I remember my financial year. It is the same financial year, so it started on 1 March 2023 and ended on the 28th of February 2024. My asset was sold on the 31st of December 2023. So you will calculate your months, and the month of December in this case will be included because I'm also looking at the day. In example 1, September was not included because it was sold on the 1st of September. But this asset in this scenario, this one is sold at the end of the month, so it means that that month will also be included. So December is also included, and when you include December in your calculation, it will give you a total of 10 months. And now that we have everything, we can now substitute into our depreciation formula and get our depreciation for the year. So our carrying value is 58,000 multiplied by 15 over 100 multiplied by 10 over 12. 10 is the number of months that our asset was still in our possession. So from 1 March to the 31st of December. And you plug everything in your calculator. You plug everything into the calculator as it is, and it will give you a total of 7,250 as the depreciation for equipment that was sold during the year.